Hey, thank you for taking the time to click on today's video. You've probably heard it said that stocks take time. And you know what? That's a good truth. It's something that if we look historically, we know that stocks do take time to appreciate. They take time to grow. This is the reason why when we start our investing for ourselves in retirement, we want to start young because time is our friend. It takes time for corporations to come to market. It takes time for corporations to grow and to expand their marketplace. It takes time for them to perfect their product that they're selling. It takes time for them to work out the wrinkles and perfect their business model and be able to bring a steady revenue and grow equity growth and profitability for their shareholders. It takes time for all of that. The flip side of that coin, stocks also have a real knack for taking time. Now, before you click off this video thinking, well, Johnson's just here to bash on stocks, hold the phone, just hang on and wait to the end of the video. And I'm going to show you that there is a very simple methodology to stay in stocks, but to do what you need to do. Now, the first thing that I see as an advisor of over 20 years is the thing that I think is most pervasive. Within the investing world, financial advisors and brokers especially convince their clients that stocks are the very best thing to get them to retirement and the very best thing to get them through retirement. I would argue that point. And we need to think about this kind of philosophically. You know, Wall Street can't make money on our money unless our money's in Wall Street. So of course, the product that they want to sell is the product that they're going to hype the most. That's like a realtor saying that real estate is not a good investment. I can't find a single one of them. But when we think about stocks, it does take time for those stocks to appreciate. I think it was Warren Buffett that made the comment that, you know, the stock market is the most efficient machine to take from those who are impatient and to give to those who are patient. Well, Warren Buffett knows a thing or two about stock investing. One of the pervasive lies is that stocks and mutual funds are the very best tool to get you up to retirement and then through retirement. And what I mean by that is this. We all know that as we gradually go through life, our needs change. And one of the things that I know you know as a stock investor is the fact that you haven't saved all of this money for your health. You save this money on purpose. You saved it for a reason. And the reason that you saved it and then you followed all the rules and set money aside in the 401k is because you knew that that money was going to be important to you when you retired, when you came to the distribution side of your life. And you were going to need to take and use part of this money to supplement your retirement. But the problem is that if we continue to buy this mistruth, I believe, that stocks are the very best tool to carry us through retirement, I want you to consider something. Stocks have a real ability of taking your time, meaning taking time away. What do I mean by that? Well, let's say that you retired right here in the beginning of the turn of the century in 2000. And let's say that you had $500,000 that was saved in retirement. And all of a sudden you retire. And for the next 3 years, the stock market loses 50%. Let me ask you a question, a genuine question, and be honest with yourself. Are you really going to feel good about spending your money? About taking and selling shares that continue to lose value literally every single day? Are you going to feel good about taking an extended vacation? Are you going to feel good about spending a whole bunch of money to maybe buy the new home or to build the home? I'm willing to bet not. And you see, when we look at history, we notice that when the market falls, it always does what? It takes time to recover. This period of time was one of the worst. It took 7 years for the stock market between the dip to the recovery. Now, was the volatility over in the stock market? Certainly not, because we know from our history books that we go from the dot-com bubble back to the previous high, and then what do? We start the next cycle. This time, it was pretty serious. Not that this one wasn't serious, but this one was even more serious. This was the Great Recession, in which stocks lose 63%. Let me ask you, maybe you weren't retired here, but you were retired here. Maybe you were even working, as many of my clients were, and you still remember what that was like. You remember your 401k turning into the proverbial 201k. You remember losing money. And guess what? It took time to recover from that loss. Today, we open up the news, we listen to all this hype about the Federal Reserve raising interest rates. What does that mean to us? More importantly, what does it mean to our stocks? It means that we've got to be ready for what might be a taper tantrum. Another time in which the market sells off. At the end of 2018, the Feds raise interest rates and the stock market says, not gonna fly. And it takes literally 9 months to recover from that. We go into COVID-19. We see where the stock market drops 37% in literally 6 weeks. And it takes us 8 months before the market comes back. And why did the market come back so carefully? And why did it come back so fully? Because the Federal Reserve jumped in. They lowered interest rates. They infused a ton of money into the stock market. They had to. Otherwise, we would have gone into a massive recession. So you might be thinking in your mind, well, Matthew, I don't see the big deal. The market always recovers. That's not the point. I won't argue that point. The market does recover. The question becomes, do you really want to have to wait on doing the fun things in life because the market has sold off? This is the reason why diversification is so important. So what do we do in order to make this work better? Well, I would argue that as we get closer and closer to retirement, we want less and less of our money exposed to the volatility of the stock market. This is only common sense. Even stocks and stockbrokers will tell you this. But we need to understand what the alternatives are. And the thing that will actually give you time, give you the ability of being able to do the fun things that you want when you're in, finally, that distribution phase of life called retirement, is one word. And that one word is income. How do we get income? We have to purposefully invest for income. You see, every mutual fund, every stock is not designed the same. There is a tremendous number of investments that are growth investments. They pay next to nothing, if anything, in dividend form. And those are the stocks that we want to hold when we're in the growth phase of our life. But as we get closer to retirement, we get into retirement, now we need to repurpose our money. Now we need to start to begin to reevaluate how we're investing our money so that we can invest it for the next stage of our life. And what does that look like? It looks like moving from growth to income-based equities. In other words, going from stocks or mutual funds that are basically just designed for growth and you either get the up or you get the down, into moving into, I would suggest, equities that are paying a good strong 3.5, 4% dividend. Starting to implement some fixed income, things like bonds and bond-like instruments, not bond funds, but actual bonds and bond-like instruments, things like preferreds and business development companies, things that are going to be able to take all the money that you've worked so hard to save and now turn it into an income-producing tool. Now, why is that important? Because you see, when you're in the distribution phase of your life and your portfolio of stocks goes up, can you spend that? You can't spend that. You can't eat that. You have to sell those things. I don't want to have to sell anything. I want what I have worked for, saved for, producing income for me. That $500,000 that I've worked hard to save in retirement could be producing for me $25,000 in interest and dividends if I invested it properly and I invested it intentionally for income. So I hope today's little video has helped you better understand stocks take time to grow, but stocks also can take your time when you least can afford it, and that's in the distribution phase of your life. I hope you've enjoyed this video. If you have, I encourage you to give us a thumbs up. If you like these little videos and you want to be alerted to any videos that we have in the future, hit that subscribe button. That little bell will remind you when we have a video. And I encourage you, share this with your friends. If nothing else, to stimulate a reevaluation of how you're investing your money and whether or not you're investing it properly for this stage of life that you now find yourself in. Thanks so much for watching. I'm Matthew Johnson.